Yesterday, Bitcoin briefly surpassed $25,000 for the first time since mid-June, before slipping back as momentum continued from cooler than expected U.S. inflation data. Now, for more on all of this, we're joined by our Bloomberg crypto reporter. She's Nicolle. So, Emily, thanks so much for joining us. If you look at Bitcoin, it did appear to have a bit of a rocky start this morning after a bit of a run-up in the weekend. So what exactly is going on?
So yesterday we definitely saw a bit of a rally for Bitcoin. It was coming off the back of some more payroll data or jobs data from the US anyway on Friday, which seemed to suggest that, there are fewer rate hikes in future, or at least less monetary tightening than we thought. And all of that helps to contribute to a better environment for risky assets like crypto. But this morning, as you said, it's definitely been a rocky start. It went up to 25K again this morning and then has gone down below 24K. We're now seeing about a percentage down. A broader crypto rally as well has also kind of weaned off, and all of that contributes to soured bets for Bitcoin.
So, I mean, overall, it does seem like we've had a bit of a broad rally when it comes to crypto in the last month or so.
Yeah, in the last month or so, as you point out, like the data that's been coming out from regulators has been broadly positive in terms of what they expect to do with monetary policy and with economics, and that then helps risky assets like crypto. So for Bitcoin, it's definitely been bouncing off that, and that kind of points towards how investors view these assets now. They're almost part of the traditional risky asset basket, not like last year when everything was a fad or FOMO.
So are you expecting this to continue, that it's becoming more mainstream and therefore it will become more stable?
Whether or not it'll be stable is another matter. But I think definitely it's still a volatile asset, right? Like it's lost $1,000 today, and that's definitely a big drop if you were to think about what it's like compared to a different asset that's not crypto. But definitely over the last year, what we've seen is that crypto is becoming more and more correlated with traditional tech stocks, with the S&P 500. That correlation point has been at 0.6 for as long as I can remember at this point. So it definitely behaves like any other risky asset, and that kind of lends itself to the fact that we do see these ups and downs as and when economic data comes out.
And Emily, I mean, talk to us about the difference between Bitcoin and actually some of the other crypto assets.
Yeah, so in the last few days, we've seen a lot of differences actually between Bitcoin and its younger sister, I guess I'd like to call it Ethereum or Ether, because Ether itself is due to undergo a major upgrade next week, maybe around the 15th is what we're expecting at the minute, to its underlying network. That means it's going to be shifting away from the way it currently mines tokens and validates transactions to a different method that is supposed to be a bit more environmentally friendly, a bit more efficient, will help reduce things like transaction fees. And because that has been in the pipeline for so long, and we're now coming to those final stages of when it'll begin, people are kind of pricing that in. Investors are betting a lot on Ethereum optimism, and that's also bouncing other coins that are similarly based on that blockchain, like Dogecoin and the other underlying networks.